If you have ever said, I want to start Forex trading but not know where to begin, this video is for you. I'm a six-figure trader and I've been trading for the past 9 years, and I'm going to be breaking down what Forex trading is. I've been able to help many other people to be able to buy their first car, make their first million, and I'm also a very profitable trader. And you'll probably be wondering, how the hell am I able to achieve this success at a very early age? The answer today is what I'm going to be breaking down by explaining what Forex trading is to you in this video. So if you're able to watch from the beginning of this video to the end, trust me, you should be able to place your first trade, make withdrawal, and be able to generate this result and replicate it over and over again each month. Today we are going to break down what Forex trading truly is, how the market really works, tools you need to start, basic winning strategy, placing your first trade, common mistakes to avoid, and cashing out massively. What is Forex? Forex is simply the simultaneous buying and selling of two currencies. We all know that every country have their country's currency. So the exchange of one country's currency to another country's currency, that's simply Forex. So many of you would have traveled to another country. So the process of you exchanging your Naira to United States dollar, that is just Forex. So you participated without even knowing. So for someone who is living in America to Europe, the process of changing United States dollar to euro is actually Forex. Anytime a particular country's currency is being exchanged for another one, that is just participation in financial markets. Now, hold on, that's not what you're going to be doing. Yours is just going to be on the phone, but in a more faster pace. Then you're going to be taking advantage of each tiny price movement, which I'm going to be breaking down for you soon. Just as I've said earlier, each country have their different currency. For example, USD, which is United States dollar. Euro, which is used by the European zone. GBP, which is Great British Pound, used by the people of the United Kingdom. Then we have Naira, Nigerian Naira. We have ZAR, South African Rands. We have AUD, which is Australian dollar. We have NZD, which is New Zealand dollar. We have JPY, which is Japanese yen, and so on and so forth. There are a lot of them. So if you'd notice, all of these currency pairs are always in form of 3. So this code is decided by a body which is called ISO, which is International Standardization Organization. So they are the ones that came up with these codes and the pairing. For example, we have Euro USD. You can't say USD Euro because it's already paired by this body, International Standardization Organization. So when we say Euro USD, it simply means, if I say buy, it simply means I'm saying Euro is going to be bullish and dollar is going to be bearish. And if I say bullish, bullish means buy, and bearish means sell. Alternatively, I can also say long. Long means buy, bullish, and bearish means short and sell. So in order for context now, let's put everything together. So if I say long, bullish, buy, I'm saying the same thing. And if I say bear, short, and sell, I'm saying the same thing. The concept of these currencies are just simple. The first two letters of these currencies represent the country's name, and then the last letter represent the country's currency name. For example, USD. US stands for United States, and then the D stands for the dollar. GBP, Great Britain, pound. NGN, Nigerian Naira. You understand? JPY, Japanese yen. CHF, Confederation Helvetical franc. AUD, Australian dollar. NZD, New Zealand dollar, etc., etc. That's how the formation of all these currencies are being made. I'm sure you're probably watching me right now. You have exchanged your country's currency to another one. Maybe probably when you're traveling or something. Anytime in my own country, if you go to Ireland, for example, meet an Abokima, the first question is going to ask you is, Oga, you want to buy or you want to sell? Which simply means, do you want to buy or you want to sell? The reason why he's asking is so that he gets to know the price to give to you when you want to buy from when you want to sell. If you are buying, he's most likely going to give you a higher price. And if you are selling, it's going to give you a lower price. So the difference between that is his instant profit. But there's another way that you also get to make profit, which is what I'm going to be explaining to you later on. So for example, if they buy dollar from you in Naira in Nigeria when it was $1 to 1 Naira, for example, and then they buy $1,000 worth from you, that means they're going to give you 1,000 Naira for $1,000. They're now changing with today's rate, which $1,000 as of today is currently 1.6 million Naira. So that would mean that they would have made that much difference in price change. But what would have happened if Naira actually did really well, and then $1 now went to $1 to 1 Naira is no longer $1 to 1 Naira. Then now went to $1 is now equal to 50 kobo. What do you think would have happened? He would have also lost. But in most cases, that's why it's important you study the market trends and know what is currently going on, and then you'll be able to follow with which price will likely go, and then you don't go buy a market that's going to fall down on you whilst you are holding. That's the most way people get to make money. They buy low and then they sell high, which is what I'm going to be teaching you in this video, how to achieve that. How does the market work? Forex market opens 24/5 in a week, from Monday up until Friday, technically. This simply means anytime any of the 4 major sessions that control the whole market in the world, they are open, their banks are in operation from 8 a.m. in their time, local time, then the market will be open. Now, what are these countries and what are these sessions called? We have first the London session, then the New York session, Asian session, and then the Sydney session. Anytime it is 8 a.m. in any of these countries, their local time, market will always keep rolling. That's how it works. So here is the sheet right now showing you on your screen. I helps you to convert it to any of your local time so that you can know when you should be trading. Then the next question might be, when is the best time for me to trade? The best time for you to trade is when there's a huge volatility, when there are many people in the market. London controls over 30% of the market share, so it is regarded as the business center of the world. So you want to be trading during the London session and followed by New York session. So there's a time that the two of them get to meet, which is what we call overlap session. So for those who are in GMT +1 like I am, that happened between 1 p.m. to about 3 p.m. This is the best time where you get to have high volatility, and then other people can also trade any other time. That doesn't mean you cannot trade any other time, but I'm talking about when you have high volatility for you to be able to place trade and close trade immediately. And the next question will be, what currency should I be trading? This is where I have to explain the major currency pairs and then the minor currency pairs. The ones you should be trading more should be the major currency pairs. Now, what are major currency pairs? Major currency pairs are pairs that are highly traded by most people. And as a result, the spreads and commissions are very tight, and it is very recommended for beginners to actually be trading these pairs. So any pair that is crossed with the USD is regarded as a major currency pair. The list of these pairs are Euro USD, GBP USD, USD CHF, USD JPY, USD CAD, AUD USD, NZD USD. They are 7 in number. These are the major currency pairs as a beginner that you should be focusing on anytime, any day. Why? Because the spreads are very tight. Most people trade them, and the volatility, they are always there anytime, any day. And then we have minor currency pairs. Minor currency pairs are just pairs that are crossed with other ones except with USD. So for example, if I put GBP JPY together, that's regarded as a minor pair. GBP JPY, GBP AUD, GBP Canadian dollar, GBP CHF. And if I put CHF JPY, these are just crossing them all together. These are minor pairs. CHF JPY. So these are the sheets here to help you with the GBP crosses, the AUD crosses, the Euro crosses, the CAD crosses, NZD crosses, and so on and so forth. And then we have exotic pairs. Exotic pairs are pairs that are rarely traded, countries' currency that are not so popular. For example, South African rands, Nigerian naira, SGD Singaporean dollar, Mexican pesos, etc., etc. Yeah, these ones, they are very volatile, and as a beginner, we always recommend that you avoid such pairs. And in Forex trading, you can also trade other instruments like metals like gold. Gold's currency representation is presented with XAU. So if you see XAU USD, that is gold. These are metals. XAU USD gold, XAG USD, that is silver. We have palladium, etc., etc. A while ago, I mentioned volatility, and I need to explain that so that you can know how it affects trades. Volatility is simply the presence of individuals that are buying and selling in the current market condition. We have high volatility and low volatility. It is deemed to be high volatility if we have loads of people that are buying and selling at the same time. It's deemed to be a low volatility if we have only a few buyers and sellers at that particular time. When I mean volatility, it has a lot to do with the big market mover, not just between me and you. Now, it is worthy of note I tell you the people that are actively participating in the Forex market. This includes central banks of Nigeria, the major banks, the big banks, the commercial banks. Then we're talking about the brokers, we're talking about hedge funds, we're talking about speculators and individuals. It is worthy of note that individual participation is less than 2% of all of this. So if you think that the Forex market is already saturated by individuals, you have to think again, because we don't really have money that is needed for you to really move the market. Because every day, this financial industry has over 5 trillion flowing every day. So it is the biggest financial market on earth. Forex is the biggest financial market on earth, bigger than both New York Stock Exchange and London Stock Exchange put together 200 times. What are the tools you need to start Forex trading? The most important thing you ever will need is a smartphone, and that's what you are probably using to watch me right now. Then you just need to use that smartphone right now to go to your Chrome browser or click the link below this video and sign up with a brokerage firm. What is a broker or a brokerage firm? Broker is the middleman between you and the interbanks where the Forex really takes place. Whenever you are buying, they take your buy order, exchange for someone else's order that is selling. If you are selling, they exchange for someone else's buy order. That's just basically what they do at the back end. And then they give you leverage and so many other things, which I'm going to be explaining to you later on. Just think of a broker like your normal local bank, like GT Bank, FCMB Bank, Wema Bank, any one of these banks. That is what they are. So without them, you're unable to send money from A to B. Without broker, you're unable to place your trade. You're unable to close them. So that's why they're really important. So pick up your smartphone, click on link in this description or that is pinned to the comment section, and you sign up with this broker, which is sxmarket.com. So if you sign up, the first thing there is to ask you to provide your email address. So put your email address, put your country of residence, put in your password, repeat the password, and then leave the partner code that pops up right there, and then you just click on I am not a USA resident and click on register. So for those who are in the United States and in Canada, they are not accepted on this brokerage. So it's advisable that you use FXCM for those in this other country. But however, if you're in this United States or Canada and you want to use this same broker, just make sure that you have your African detail. You still will be able to use this broker successfully. So the importance of using this broker is that it allows you to use the same leverage that we have, and then you also will be able to have access to fast withdrawal, fast deposits, and then it's pretty much regulated in other countries except United States and in Canada. Since brokers are regulated just like our local banks, you are needed to do your KYC. So there are two things you ever would need. Number one, your proof of identity. Out of these four, any one of them, if you have them, then you're good. Passport, national ID card, voter's card, or driving license. Any one of these four is just good. They just need one to prove that your identity, you are real. And then number two, they need your proof of address. The one that usually work here in Nigeria is utility bills like bank statements or water bill, electricity bill, but the one I work is bank statement. So just write to your bank or just walk into any of your bank branch and ask for a bank statement that shows just one transaction with your name, your address that you feed into the brokerage, then that's all, and then you'll be verified and you're good to trade. Now the step, in order for you to go ahead, you want to create an account. The first thing first, once you have done your verification, you should be land at this page right now in front of you. The next thing is for you to create a demo account. Click on the create demo account, wait a little bit, let the page load up. Once the page loads up, you have a standard account and a raw spread account. You can experiment with any of these two, but I advise you go for raw spread account. So if you click on raw spread account, click on create account, it loads up, click on deposit. Then I'm going to just put in any amount that I want. I click on deposit. Then immediately an account is already open for me at the top down. You see I have an account of $5,000. I also have an account of $10,000, but they are all demo accounts. Demo accounts are not real money, just a simulation money. That is paper trading money for you to just do simulation. With real markets, but the money is not real. The profits you're going to be making is not real, and the losses you're going to be making too, they are not real. But these are the money that you probably would have lost if that money was real. It's a real market condition. I hope you understand that. So the reason why you're seeing that I have two accounts open for me here, it's just there was some error, so I have to retake it. So that's why you're seeing I currently have two. So if you've gotten to this extent, then you've successfully opened your demo account and you're ready to trade. Then the next tool you'll be needing is MetaTrader 5. MetaTrader 5 is an app where it allows you to place the trade. That's your trading terminal. So you can have that downloaded on your laptop if you want, or you have that downloaded on your phone. So I'm going to be going to the phone route because I'm just going to be helping you get started using phone, because I want everybody to start this process right now. So on your phone, I'm going to pick up my phone again. I'm going to search my app store and then search for MetaTrader 5 or MT5 for short. MT5, still the same thing. It loads up right there, and then here's my MT5 at the top. I'm going to click on download and I click on open. So yours is going to pop up, open a new account. Do not do that. Instead, let me show you how to sign in your demo account. We just open now with your brokerage and to link that to your MetaTrader 5. So you should have already have an idea of how these two things work now. yours should be like at this point, right? This is where yours should be correct. So on your accessmarket.com is your broker. This is where you deposit money and you also withdraw money anytime you make profit. But where you trade it is your MetaTrader 5 application. So how do you link the two of them together so that you can trade the money that you have on your brokerage account? Simple. All you need to do is to swipe up, click on any of the accounts. Let's say, for example, I want to link the one of $5,000 we just opened, which is 8254. That's the account number. I'm going to tap on that account number. Then the first thing I want to copy is to copy my server, which is Access Markets. I'm going to click on copy. Yours might be different depending on the time that you're signing up with them. So I'm going to come here, copy, and I'm going to paste it on my search bar under my settings. So let me go again. How I got here was I came on here, I click on settings at the bottom right corner, then I tap on this plus icon, and on this search bar, I'm clicking on Access Market and I tap here. Then the next thing that it requires is I should copy my login and paste it. I'm going to swipe again, come to my login. My login is 82544. All right, I'm going to tap here and I paste. And then the password, I can just, maybe I've forgotten my password. I can just change my password immediately to anything random. So I'm going to change it to 12345 QW12. And I've forgotten that password already. So let me just do something that's very easy peasy. So I just changed it. So I'm just going to put that password. I change it to right there, and then I click on done. That is my $5,000 right here. So I've been able, any trade I place right now, if I take a loss right here, the money is going to reduce here. If I make profits, for example, maybe I make 1,000 on top of this, it's going to change from 5,000 on my access market to 6,000. Then I can go ahead and make withdrawal. Then that brings us to the topic of withdrawal. Let me take you back to the homepage on account. How do I make withdrawal? Obviously, you can't make withdrawal on a demo account. You can only make withdrawal on a real account. So for example, to open a real account, you have to do the same process, but now on a real account. Instead of creating demo, you click on plus for a real account, and then you click on any one of these account types. The one I would recommend again is to select a raw spread account, or if you want a 50% bonus on top of the money that you fund, you create a leverage plus account. Let's say, for example, we want that. I'm going to create an account, and then I'm going to click on deposit. Then it's going to take me to all these means of deposit. I can either deposit with BTC, USDT, TRC20, or instant bank transfer. So I can transfer money into my Naira and then it will reflect as dollar. That's simple. I can transfer my CDs, I can transfer my South African rands. You can transfer any of your local country's currency in, and then you have it there funded for you. Then how do you then make withdrawal? You have to come on here and click on withdrawal. Any money that you deposit, you always have to take it out the same means which you deposit. For example, if you deposit through BTC, you should be making withdrawal through BTC. Same is true with the USDT, and same is true with the bank transfer option. So that is how you can make withdrawal. So now let's talk about how to place trade, how to make money before we start talking about withdrawal. Because it is when you make money, that is when you make withdrawal. So now let's go to the MetaTrader 5 application. It is time for us to bring every theoretical thing into practical. Just hang on and follow me with your phone on your left hand while you're watching me on your right hand. So simple. So there are 4 components at the bottom of your screen that you have to understand. So we have quotes, we have charts, we have trade, and we have history. These are the 4 things. Settings is where you get to log in and get to tweak around your charts stuff. But the most important things are these 4 that you always be shuffling around every now and then. So quotes. Quotes are where your pairs are listed. So you can see Euro USD, GBP USD, USD CHF, USD JPY, USD CAD, AUD USD. All the pairs are listed for you. These are major pairs, and then there are also minor pairs. So there are 2 things you can see at the top left corner, at the top left and top right corner. So the left one means if you want to change mode, this is a simple mode, please leave it in advanced mode. You get to see more information. Then you see this pen tool at the top right corner. It's when you want to order. Maybe you want USD JPY to come up for some reason, and this is where you just get to drag this thing at the far end to reorder it. Or maybe, for example, you want to delete the minor pairs that are around, like NZD CAD, GBP NZD, Euro NZD, AUD NZD. These are the minor pairs right now on this screen. So you just click on the bin at the top right corner, every writing delete, and then you have this one option. You have this option. Or maybe I gave you a signal and you don't have that particular pair available. You can just search any of those pairs. Maybe I said buy GBP JPY. You look for GBP JPY and you tap on the tiny green plus icon by the side, and then it comes to this bottom right here. That's how to add any pair of your choice. Or maybe you want to add gold. The code for gold is XAUUSD. You tap on that tiny icon, it comes immediately to the front here, and you're not able to trade it. Now let me walk you through each one of these things, how to place trade with them. So let's say, for example, you want to trade gold. You're going to tap on gold first off. You click on trade. So this first line is where you put your lot size. So what is lot size? Lot size is the contractual sizes that determine how much you make or lose in a particular trading transaction. The minimum lot size you can ever find in Forex pairs are 0.01. We have 0.01, we have 0.1, and we have 1.0, and upward and upward. So this chart on your screen simply says it all. 0.01 simply means for any pip movement, you're going to be making 10 cents. If you're using a lot size of 0.1, for every pip movement, you're going to be making $1. For every pip movement from 1.0, you're going to be making $10. If it is 10 standard 10.0, for every pip movement, you're going to be making $100. And if you're using 100.0, 100 lot size, you're going to be making $1,000 for every pip movement. Now, I keep mentioning pip. What is pip? Pip simply means every step that the market make. Like we as a human, if we make any move, we call it a step. So in markets, any step that you make, any movement, one movement is called one pip. So if I use 1.0, which means for every pip movement, I'm going to be making $10. So now imagine market move 10 pip in my favor. That means I'm going to be making $10 times 10, which is $100. So you can understand, have an idea how much money you can make. So also, if it moves 10 pip against me, I'll be down $100. So this is what determines how much you get to make or how much you get to lose per time. That's what lot size is. So now by this explanation, you understand pip, you also understand lot size. So let's hang on, let's keep going. So on this trade, since I have an account of $5,000, that is a relatively decent amount of money. So I'm going to be using 1.0. So what it simply means, for every pip movement, I'm going to be making or losing $10. So that side explains the lot size. Then stop loss. Stop loss is an order that I give to the broker that anytime price gets to this extent, I agree to be wrong. Please cut me out in this amount of loss. Whether or not I'm in the market, please cut the loss. That is enough for me for that day. So that's why I actually think Forex is one of the risk-free business in the whole world, because it allows you to predetermine your risk even before you start. That's what stop loss is. Then take profit. Take profit is just exact opposite. Then if market is moving in my favor, in profit, and then if it gets to a certain point and I'm satisfied with that amount of profit, whether or not my phone is off or whether I'm with my phone, it gets to lock me out and keep my profit to wait for me in my brokerage account, in my trading account too as well. That is what take profit is. And then once I'm done putting these figures in, which I'm going to show you how to know the right stop loss to put, how to know the right take profit to put, then I just click on buy by market, or sell by market rather, on buy by market. If I click on buy by market, it means I'm buying or I'm longing or I'm bullish. If I click on sell by market, it means I'm selling or I'm shorting or I'm bearish. That's how to deal with this side. So for example, I'm not going to put stop loss, then I'm going to put take profit. I'm just going to click on buy gold. I didn't do analysis, I just want to show you how it works. So you can see right now on this trade, I went in on a buy. I'm already in profit of $14. In fact, $45 right now. It's fluctuating. So now let me explain everything you can see right now on your screen so that you understand why or how everything works. So you can see balance. Balance doesn't change until I close this trade. Balance is the amount of money I have already funded in my SS market, my brokerage account. Equity is the current running trades plus or minus my current balance. So if I say $49 plus $5,000 is going to give you what equity is, all right? But professionally, if you are asked what equity is simply free margin plus margin. So if you also go ahead and calculate free margin plus margin, you also arrive at equity. So that means 1,504 something, which is fluctuating, plus 3,425 is also going to give you what equity is. All right. Equity is, if I close this trade, what will be my balance? That's what your equity truly is. Then margin. Margin is the amount of money that you pull down, your 0.1% of the money that you pull down to be able to participate in this trade. So in order for you to carry out any Forex transaction, let's say for example, in order for you to do one lot size, in the spreadsheet I showed you about lot size, contract size, you see that you needed 100,000 units of the base currency in order for you to place 1.0. Then you're wondering, how am I able to foot that bill when I only have $5,000 in my account? That's where we have the leverage. Leverage is an amount of money that the broker lends you to do business. Once you are done, whether in profit or in loss, you must return their money back immediately. They're taking it back as a matter of fact. So anytime I place trade, Broker brings 99.9% of that amount of money, and then I bring 0.1%. So the 0.1% that I bring is margin. What the broker brings is leverage. Do you understand? So in order for me to place this trade, the 0.1% I needed to bring for me to perform this trade is margin, which is $3,425 in this transaction, in this case. So if that's because the leverage I chose in this account was a tiny leverage. If I chose a bigger leverage, then that would mean that I only have to bring a small amount of money from my pocket, because broker is willing to take care of the other costs. So that's why we always encourage you to select a bigger leverage so that you can have more money to place more trade. There are downside to it, and there are also good side to it. There are more good side to it if you know how to use it. All right. So the next thing you also be seeing on your screen is free margin. Now, free margin is the amount of money that is left for me to place new trade. Now, after they've removed $3,425 my margin from my account balance to place this trade, then how much money is left for me to place more trades? That's what free margin is. So if I go in with one standard lot size again, it will tell me insufficient fund. Let's try that again. Let's just experiment and go on SAU USD and click on buy again. See, it said not enough money. Why it's telling me not enough money is because I don't have $3,400 left again to be able to place new trade. That's why it's telling me not enough money. And also you can see the margin level percentage shouldn't be less than 100%. If it's less than 100%, you're going to have what we call margin call. So let's say, for example, I have about 5 trades running right now, and then the one with the biggest loss will be closed out automatically by your broker. Margin level percentage is a way that the broker used to protect themselves against any liquidity. Remember that I told you that they borrowed you some money, 99.9% to the leverage to do business. So in order for that money, nothing must happen to it. The only way they have to protect themselves is margin level percentage. If your trades is going below 100%, they are going to close out the one with the biggest loss, and then close everything out. Eventually, if you do not close, they will send you email, they will send you a prompt on your MetaTrader 5 app now. And if you are unable to, if you do not close it, they will assume that you are not on phone, you're not there. They will close everything out, and then your account reset to 0, and then they take their money. You are not owing them, they are not owing you, and no one is affected. So that's how they protect themselves. So one more thing you also notice there is, even if you were not here when I placed this trade, you can actually interpret what this trade really means. You can know that I'm on XAU USD, I'm on gold, and I'm buying with one lot by just seeing this buy one. And then you can see this first price, 34.27.36, that's my entry price, and 34.27.2, that's the current price. You see, it keeps changing. And then the profit that I'm in is just by my side. If I tap on it one more time, you can see the stop loss and take profit. They both are empty. Now let's talk about putting stop loss and take profit, because that's not a natural practice without putting them and you're trading. Stop loss, always make sure you put stop loss. I intentionally did not put it so that I can strongly warn you. Always make sure that SL part should not be empty. Always make sure that you put it. It's very, very important. Now let's go ahead and check on, we have talked about quotes, and we thought next thing is to talk about chart. But before I talk about quotes, it's important, these numbers that I keep changing. One of the things that actually almost scared me off from trading is because of these too much numbers. I actually felt that trading was too much calculation, and it is not. These numbers are just bid and ask price. So when you went to meet Aboki and they ask you, a guy, you want buy or you want sell, it is this price they want to give to you. So today, Euro USD is 1.1509, and then the other one is 1.15107. So if you want to buy, they are going to give you the other price, the right hand price. If you want to sell, they'll give you the first price. So these are the high and low. So the difference between the two of them is what we call spread. Spread is the difference between the bid price and the ask price. So when you are buying, they give you a higher price. When you are selling, they give you a lower price. So it is when price start moving in your direction that when you start making money. If you start moving down against you, if you are selling, you are making money. Some of you also think that if it is red, it's a bad thing. No. If it is blue or if it is green, it's a good thing. No. If you are selling and the candles are red, it is dropping, it is a good thing. You'll be excited because you said it's going to sell. If you are buying, if it is green pushing up, then it is a good thing. I hope that makes sense. So the next thing you also understand here now is chart. If I click on chart, you'll be able to see this trade I'm in on. You can see XAU USD. I'm currently buying at this point. You say buy one, but then there's nothing, no stop loss, no take profit. Now, this is how I can put stop loss on this trade. Simple. All I need to do is to do my analysis. Talking about analysis, I'm going to take you to a proper place where we do analysis on laptop, but this is where you can do your analysis on phone. So I'm going to click on this first tool right here, that crosshair, and I'm going to say I want my stop loss to be here. So if it is here, I'll trace it to my right hand side, 3415.08. That's where I want my stop loss to be. I'll come here, I'll swipe, click on the pen tool, 3415.08. I tap on modify, then I come back on chart. You see, I'm going to be having that red line that says stop loss. If I come back on trade now, I tap on it, you see that my stop loss level is no longer empty. I now have a stop loss figure right there. So if price, for any reason, if price come back to this point now, it's going to lock me out at that point in that amount of loss. Same also applies to take profits. Take profit, since I'm buying, I'm saying that it should go up. So it only makes sense that I will only make money when markets start going up. So however, if you get to this extent of profit, lock me out. That's the meaning of take profit. So take profit will now be 3461.55. I'll swipe again. 3461.55. If you're using Android, exact same thing applies. Android is underlined with red for take stop loss. Take profit is underlined with green on Android, and you click on modify. This is how you have it right here on your end. So you see I'm on this trade. My take profit is at the top, my stop loss is at the bottom. If you are selling, you reverse this thing. If you are selling, your stop loss will be at the top, your take profit will be below, because selling, you are saying that price should drop so that you make profit. So your stop loss will be at the top and your take profit will be beneath it. I hope that makes sense. Then on this screen, let me just explain some things. We have time frames. Time frame simply means each of these candles now took 15 minutes to burn, to open and to close. So if I tap on this 15 minutes, I can change to any time frame. So we have M, which stands for minutes. We have H, which stands for hour. So if I say H1, it means each of these candles took 1 hour. If I say daily, each candle here took 1 day. If I say weekly, W means weekly. If I say MN, monthly, and so on and so forth. But as a day trader, you always want to stay on the 4 hour, 1 hour, on 15 minutes for you to execute your trade. There are more videos regarding the time frame analysis in my channel. So you can click on this video in order for you to check the strategy that I use and the time frames which I trade on. The next thing is on your chart, you probably might have your chart not like mine. If your chart settings is not like mine, if it is not blue and red, you want to make it exactly blue and red, click on settings at the bottom right corner, and then you want to click on charts, and then this is where you get to do this whole setting. So take a screenshot of this setting now. Make sure everything I toggle on here is also toggle on yours, and what I toggle off is also toggled off, and then you click on colors. These are my color settings. So take a screenshot of this like this and go do the setting, make it exactly like this on your own end. You will arrive at the same answer that I have on my charts. With that being said, we have already explained what trade is. All right, if you also want to place trade without going to your quotes, you can place trade from here by just clicking the plus sign at the top right corner right there. You see we arrive at here. You can also place trade on your chart. Maybe you do your analysis on this your chart, you can just tap on this top right corner and the last icon, and you can put your lot size in between there. Tap on accept, toggle it on and tap on accept, and put your lot size. Maybe you want to use 0.1 and click on buy. You see, you can just easily place your trade there without having to leave there. You see, I just added a new trade which is 0.1, and I want to go and put the same lot size, the same stop loss rather, which I have on the other one. So the stop loss is 3415.08. So I tap, I swipe. I'm just teaching you again so that you can learn how to do it. Tap on here 315.08 and I click on modify. I'll do the same thing for the take profit 3461.55. 3461.55. Note, I didn't do any analysis. I just placed trade because I just want to show you guys how it works. So there's no analysis to this. Whether it's going to make profit or not make profit, that is not the goal yet. The goal is just for you guys to learn how it works. Then if I close this trade now, I tap on bulk operation, I can close all of them once without having to close them one at a time. So for example, I could have just closed. For me to close, I'll tap on this check sign, this last sign, and say close with loss of this. It will close me out. So you see, my balance has reduced to 4,994.80 cents. So if I go on my history, you see on my history, I'm negative $5.20. You see, that is how history also works. So I'm just going to allow this XAUUSD to hold on for a little while, and then I'm going to show you guys what I arrive at later on. Talking about analysis, there's a place we generally do analysis, and that's what we call TradingView. TradingView.com is a website you go to that gives you analysis over any instrument entirely that you want. So with this same TradingView chart, you can be able to see chart for any stocks like Apple stock, Meta stock, Tesla stock, Coca-Cola, Microsoft, any of your favorite companies that you always hear and people talk about. And then you also have access to Forex pairs like Euro USD, GBP USD, GBP JPY, GBP NZD, and also to metals, SAUSD, SPT USD, SAG USD, etc., etc. You have access to indices, US 30, US 100, US 500, UK 100, German 30, etc., etc., and many other crypto too. Bitcoin, Ethereum, USDT, everything. You can trade them all here on tradingview.com. So just simply going to tradingview.com. So once you click on this website, come to tradingview.com, you hover around products and you click on super charts. So TradingView is the fancy website you always see us post, or you see traders share on Twitter, share on Telegram, share on Instagram to represent their trade idea. This is where you get to do analysis and also to share to your friends and to say, I'm buying Tesla, or I'm buying GBP USD, or I'm buying Euro USD, as the case may be. So in order for you to have this understanding of how this TradingView works, you don't play straight from here. You only do analysis, and you go on your MetaTrader 5, which I was going to have showed you, and you play straight the exact same way I've taught you how to play straight. So on this side of your TradingView, this side is where you have your tools. Tools like you have your crosshair, you can tap on this tiny arrow by the side in order for you to expand and play around with all of these things. So if you click on the dots, you see you're going to be having dots. If you click on the magic one too, you're going to be having the magic one too. You see all these kind of things you can be playing around with. But the one I prefer to use is the cross. So here you have your trend line to your ray, horizontal ray, horizontal line, and everything. So anytime you see somebody writing on drawing on their screen, this is the tool that they use. So you can just play around with all of these tools right here. And on the top left to the top right, I'm going to be explaining now. Here's where you can change your currency pair or any instrument. So I'm currently on XAUUSD, so I can change it to anything. Maybe I want to change to Apple. Your default one you're going to land on is AAPL. That's Apple code, AAPL. So if you want to trade Apple, this is Apple stock, the chart. If you want to trade it, this is where you just come to. But since we are talking about Forex, I want to focus on Forex and XAUUSD as a matter of fact, because that's what we traded on our MetaTrader 5. So this is the chart. Exact same thing is what you have on your SS market, is what you're also going to be having here. Now you notice that when I type XAUUSD, there are many XAUUSD that popped up. But one thing you also notice that the far right, there are different brokerages that they are affiliated with. So TradingView is a charting platform that is in collaboration with any of these brokers that you see right here. So that's why you see they are showing you XAUUSD as seen on Oanda, as seen on Forex.com. All these things that you see here, they are brokerages, but only operational in the United States. So you don't want to use them because they don't have as much leverage as SS Market do have, or as the one that we use. So that's why we don't really use them. We just use them for analysis, since they are the broker that are only in partnership with TradingView. We just use them as charting, and then we play straight on our MetaTrader 5. So with that being said, we also have time frame. So if I click on the 15 minutes time frame, like what we have on the MetaTrader 5, 15 minute time frame means each of these candles took 15 minutes to open and to close. Then we have 1 hour candle, it took 1 hour, and so on and so forth. You can play around with all of these ones. And then we have types of candles, how you should appear. We have bar candlesticks, normal candles, we have hollow candles, we have volume candles, we have line chart, and etc. If I click on line chart, it's turned to line chart. So you don't want that. You want to stay on candlestick because it has more information and it's better. That's what professional traders use. Then we have the side of indicators. You can add indicators to your chart. Anything, maybe RSI, relative strength index, you can just add it. It's going to appear at the bottom. So if you're in the free version, you're only allowed to add only 3 indicators. If you want to add more, it may pop up and want you to subscribe for premium for TradingView. All right, so expect that you're going to be seeing a lot of that. Even ad will pop up at this corner of your side. That's because it's a free one. If you already started learning and you're already making money, you can upgrade like the same way I've upgraded mine. I never started out with this one too either. So this alert allow you to set alert. Maybe if price gets to a certain point, you want it to send you a notification. This one works for those who are 9 to 5, who are self-employed, who have other businesses running by the side. They don't want to be on the screen all the time. So this is what this one works for. And then you have a replay. This replay is only available for those who are on premium plan on tradingview.com. So for example, I can make this chart disappear when I want to do backtesting. So maybe I have a strategy now. I want to learn how that strategy really works. I can make this candle disappear and be playing in one after the other and say, okay, I think here I would have bought, and then I will buy, and then you see how it would have played out. Oh, I think here I would have sold. Just for replay, so it's just for studying, all right? That's what that thing is just simply meant for. And then most importantly, you can see to your right-hand side here, this is where the chart prices are of this particular gold. This is where the prices are. And then you can see the current, there's a countdown time. It means in 3 seconds from now, this candle is going to close, and another one is going to pop up. See, another one just pop up right now. That's how candlestick was. So it means that the time is currently 3:45. So in 15 minutes, this one was open and it closed, a new one just popped up again. So you have another 15 minutes countdown again. And this is the current market price. One of the other important, you don't need this other part because it's for watch list. This is an advanced feature that you need later on. I don't want it to confuse you. You can just press that tiny arrow in order for you to hide that feature. It's just for watch list. Maybe you have a couple of other pairs you are watching. Maybe you want to look at GBP USD, GBP JPY, Euro USD, XA USD, but you cannot look at them at the same time. You just want to keep them so you don't keep going to search them manually, like start searching GBP USD, stressful. Instead, you just keep them on your watch list like I have it here. I'll just be tapping GBP JPY, XA USD, GBP USD, US oil, like that. That's what that one is meant for. So in order for me not to confuse you, just hide that part because it looks a little bit complex for a newbie. So just stick with what you know here and all of that. So what I have here are the tools that I regularly use and I just favorite them. Anything I favorite, maybe for example, I want my parallel channel to be favorite. I'll click on this parallel channel, you see, it comes right here. That's what that is. So I don't need it, I'm just going to untoggle it. That's what this tool right here. If you did something, write something on your screen, even if you log out, you come back in again, TradingView will save it and keep it for you. It doesn't allow you to go back and keep doing analysis over and over again. So the next thing is basic strategy that you need for you to start cashing out in the financial markets from the get-go. So now let's go. So on your TradingView, let's say you navigate to any pair, maybe XA USD, any one of them. Just click on any one that is a clean chart. So now, the first principle I want to teach you is support and resistance. Support and resistance also means demand and supply, or the ceiling and the floor. Imagine, think of it this way. There's a way that you have a ceiling in your house and then you have a wooden floor. If you jump up to that your ceiling and your head hitting the ceiling, the chances are very low that you break it for the first attempt. But if you keep doing it, say about 10 times, the more you do it, the more the ceiling gets weaker. But then if you're now able to break the ceiling through, the next time you jump up, your head is going to go through the roof because there will be nothing to hold you. So think of that as resistance and as ceiling or as supply. And then the example is reversed for a wooden floor. If you jump up and jump down, jump up and the first time you might not be able to break the wooden floor, but if you keep doing it, you keep weakening that wood and then the wood finally breaks. The next time you jump up, you'll be going straight to the downside. Think of that wood that was holding you as a support and also think of it as a floor. That is what support and resistance simply is. The more a price tap on a particular ceiling, on particular resistance, the more it becomes weak. And if price is able to break through, the market is going to go up aggressively. The same is true for the sell. If market is able to break through the floor or through the support, it's going to go down aggressively, which is what we call tanking. So now on chart, how do we represent these things on chart? That's why we have what we call psychological level. Psychological levels are based on round-up numbers which the banks and the hedges they use to place trades. They put their stop loss at this level because it's a round-up number. Think, for example, if you ever go to the market and then someone tells you that the price of a particular good, maybe for example, maybe price of ugu is 70 naira. What is the next, as a good Nigerian mother, where do you think your mother would likely negotiate that item to? She probably would say 50 naira, or even some wicked one would say 25 naira. But I know that doesn't really apply now because the price of things might really be very expensive. But in relation to what I'm teaching you, they will price it to a significant number. So psychological level just work like that, and that's what psychological simply is. It's just by saying 50, 100, 150, 200, 250, 300, like that. It has to do with round-up number that is significant because it works just based on normal human disposition. People like to take price to a round-up figure. Maybe if you want to go buy a car, maybe GLK, and then you get there, they tell you that this GLK is for 25.6 million. You obviously will be thinking that 600,000 that is on top of it is definitely shouldn't be there. You probably will be pricing maybe 20 million or 25 million if you are lenient enough. But you're not going to say, can I pay 24 million 457,000? You're not going to give them a scattered number, just basically like we have on XAUSD. Right now, the price we have on XAUSD is 3,412.69, right? You want to look for a significant or a more meaningful number that would make sense on the charts. So for example, more meaningful number would mean that you come to this, your tool. The tool you need to use is to come to your horizontal line. You tap, drop it close to where the current price is, and then you look for a meaningful number like 3,400. So I'm going to double tap on the line. If I drop the line, double tap on it, I come to coordinates. It will allow me to edit the numbers manually. That is deemed to be a psychological level. So I'm going to just add, in order for me to add more, I just need to take a measure tool. This tool helps you to measure pips. Remember, pips, I said, is the movement of market. So you want to measure 500 pips to the upside for you to know the next pip movement. 500 pips. So the next one is going to be 3,405. All right. That's because we are on gold. Gold is very volatile. So I double tap on it. 3,005.00. I tap on OK, and then it snaps immediately there. This is how psychological levels are being formed. So if I keep adding, I'll keep adding, then the other one is going to be 3,410. That is how you find psychological level, and the market respects this level. So let me do example of psychological level for you on GBP USD too as well. So for GBP USD, the difference is going to be 50 pips. Exact same thing applies, but now the difference just have to be 50 pips. So the first current price is 1.33917. I'm just going to take the horizontal line again, horizontal line. I'm going to drop it anywhere and look for the nearest meaningful number. So the nearest meaningful number will be 1.300000. That is that level. This is it. So in order for me to know the next one, I'm going to take my measure tool. It must be 50 pips movement, please. From here, it has to be 50 pips. How do you know it's 50 pips? This last one is what is a pip counter. This one tells you the pips. It tells you the number of candles that you have to get there, and it tells you the time that you have to take that. Because I didn't spread it. If I spread it more enough, it's gonna show you more candles. All right. So I'm gonna drop it here. So the next one is gonna be 1.335, 1.335000. That is it. That's the psychological level. So I can keep adding more and more. The next one is going to be 1.34000. That's the psychological level, basically. So now, how do you trade with this simple system? With psychological level, all you just need is to have this thing mapped up on your chart. Wait for price to get to this level. It's either it breaks it or it bounces off at this level. If you break it, wait for a retest, and then you can trade. Now you can see that price got to this level. Is hesitating to break through like a ceiling, like I gave you as an example. It was able to break through it, but it came back down. It broke through it, it came back down. Now that it's unable to break it, market might start tanking. Or take this one as an example. When it was able to break through it here at this point, what happened? It acted like a ceiling, and it kept going on and on. It broke through the next one, it kept going on and on. So this is how support and resistance just basically works. So you can experiment with this over and over again on your own. Add as many as possible, as many as relevant to the current chart that you are currently trading, and make sure that it is meaningful to that particular chart. So I don't want to go too far because I know some of them, the other ones might not be meaningful at the bottom, but in order for me to just show you an example, let me just add one more to the bottom. So the next one is going to be 1.320. You see. So you see how it works. So the price got here, made points, it went up, broke through this point, it came back to reset that same line, it went up, it was able to break through it, and the market started going up. So psychological levels are very good. So just know this as support and resistance. So there are levels that price get to, market make hesitation, and you should be careful at this area. Now let me teach you a breakout system which you can measure with this psychological level trading. You can add this and any other confluence in order for you to be able to get a trade. So now that price has broken to this point, it has broken down, I see that it's unable to go down. Then what then do I think? Do I think it's going to be a buy or it's going to be a sell? The first thing to answer that question, I have to determine what is the trend. So as a day trader, I determine my main trend from the 4-hour. My main trend says that GBP USD is in an uptrend, or it's in a bullish trend, as we are going to be saying it. It's a bullish trend. Why? Because we are having, by just looking at it, you can see that it's going more of upwards. If it's going up, we call it bullish trend. So if it's going up, you want to buy because the trend is your friend. Then that's my main trend here. Current trend is 1 hour. I determine my current trend from the 1 hour. 1 hour also says that it's going to be what? Going bullish. Then the next thing is I zoom in again, I go on the 15 minutes time frame. 15 minutes time frame is where I get to take or make my decision. So since 1 hour says it's going to be bullish, 4 hours says it's going to be bullish, what will I be doing on the 15 minutes time frame? I will be bullish too. I'll be looking forward to look for opportunities that will go in line with the trend, because I want to follow the big boys. Since the big boys are buying, I should be buying too as well. So I have to do more analysis by using trend line and breakout system. The use of trend line simply means that you use this tool to be able to get a dynamic support and resistance. But this support and resistance is not horizontal anymore. It's now in a diagonal form. So I found a low here and I connected two recent lows. So this is how trend line works. Trend line works such that anytime price ever comes back again to touch on this trend, it's going to bounce it up. You need to have 3 bounces on a trend line before it can break. So if you have, just like I explained with the resistance, the ceiling, if you jump up one time, the chances are very low that you will break it. If you jump up the second time, the chances it increases your chance, but it might still not break the ceiling. If you jump up the third time, then chances are there that it's now getting more weakened. And if you jump up the fourth time, it might break. Chances are now very probable. So that's what it also happens there. So if you tap on next one, it might be unable to break, it might bounce it up. So in that case, you can decide to trade that and we call that trend line bounce. You need minimum of 3 times, trend line to bounce 3 times. Like now it has bounced once. The time it also came here to bounce, this is the second time. So study has showed that it will always come back 3 times again to bounce. If it bounces, it goes back up again and come back down. The fourth one will break. This one is going to be a break. That's what we call breakout. So if you break out, it's going to retest and start dropping. Let me show you an instance where that has happened in time past. So with this analogy now, you'll be able to understand why or where this trend line actually does work. So within trend line, there are other mini trend lines. So before now, there was also a trend line here. This is a high, this is a high, this is a high. So I'm going to take a trend line that cut across all of these things. So we are going to use the replay feature to assume that these were never in existence before then. All right, and then let's go ahead and play it. So price touched here, came back down, it touched here, it dropped. It touched here, it dropped again. Then let's keep playing. It went back up there again. After a couple of weeks, it touched again, it dropped. So this one, when it touched again, you should short, you should sell. That is a drop example. Then keep trading, but there's a time that it's going to break it. Once it breaks it up, don't try to sell again, then the trend has changed. That's what we call breakout. So let me show you when it's break. So here it's about to break. So it broke here. See the way it broke here, it tested it again, then we started seeing more up pushes from there. All right, market started going up from there. Since that time up until now, it's been going up. But the thing is, it will never come back again to take out this low. It will not come back to take out this low again, because that is the last low the market has created. So from there, just keep going up, keep going up, keep going up, keep going up. That is how the market breakout system works. Now, how do you take trades using this system? You can merge 3 things together as a conference to be able to take trade. I just want to show you one simple logic that you could use right now, and that's going to be worth your time, and you can be making money crazily from. So now, once you have your psychological levels already mapped out, you have your trend line also mapped out. So this trend line, there's another trend line inside here. Where this one stops, you start from there again too. You can clearly see that price is also breaking at that point. It touched once, it touched the second time, so market will most likely continue to the upside. So we have a psychological level here, which is 1.340000. All right, that means this level is a level that you should pay attention to. All right, we are only going to buy if this candle now comes back up again and closes above here. We are going to buy. That will mean 2 things. The things that is giving us a confidence to buy. Number one, trend line said that it's going to bounce because we need 3 touches before it can break to the opposite side. But now this is 1 touch for this new one touch. This is the second touch. So we think that the second touch will still make it to go up higher. That's 1, confidence. Confidence number 2, there's a psychological level right there. This is confidence number 2. This is confidence number 1. Then confidence number 3, if it goes, this candlestick's pattern goes back up, it means that this is going to be a morning star. That will be confidence number 3. So 3 things telling us to buy. So not until this candlestick is what tells us, it's this candlestick pattern that tells us to go ahead before we go ahead. Not until this candle turns to a buy candle, we are not going to buy yet. We're going to sit on the hand and wait until it is time for us to buy. So just watch. If this price comes back up to this extent, I'm going to go in on the buy, and you're going to see that we're going to make profits on this trade. These are the 3 conferences you need to start trading with over and over again. Please play this part of the video over and over again in order for you to get the strategy. If you need to get it on one watch, I don't expect you to get it on one watch. Watch it at least 2 times or 3 times, then you'll be able to get it over and over again, most especially this strategy part. Now, talking about risk management. Anytime you are trading, since you are a newbie, I would advise you risk 1% of your trade. How do you get to do that? All you need to do is to go to your baby pips position size calculator. Once you get to your baby pips position size calculator, you're going to put the account balance you have. So for me, I open a $5,000 account right now, and I want to risk 1%. And the stop loss of my trade, I'm going to put the figure here. Maybe the stop loss of that trade was 20 pips on GBP/USD. I click on calculate. It means that it's telling me to use 0.25 lot size. So I'm going to go on my MetaTrader 5. When I'm trading, I'm going to put 0.25 lot size. So if you go against me 20 pips, what it simply means I'll be losing $50. And if you go in my favor, I want to make it twice as much. I'll be making $100. That's how to determine how much you stand to risk. So you see that trading is actually not really bad. People that you've seen or you've heard that they lost their money and they back to village, that they sent to their village, they were actually really greedy. They didn't know or they lack knowledge. It's either of these two. That is everybody I've ever met that said that they lost money in trading crazily. This is always the 2 problems. Either of these 2. Is that they lack proper knowledge or they were just too greedy or too emotional for trading. So I hope you're able to overcome these 2 things as this class progresses. This will take me to the next topic, which is risk to reward ratio. Like I've explained, if I'm going to get into this trade right now, which is to buy this where market is currently at, and I'm to put my stop loss maybe somewhere around here, then that means my stop loss is 17 pips, 17.8, and that means I want to risk twice as much. I want to target twice as much. So until this risk to reward ratio here reaches 2.0 or 2 point something, I'm not going to stop. I'm going to leave it at 2.0. It means that as I'm risking 17 pips as my stop loss, my take profit should be times 2, which is about 36 pips. That's a good business. Just like going to Balogun market, buying Ashoebi clothes for 2,000 naira and you go back home, you sold it for 4,000 naira. I mean, that's profit because you have to factor in your transportation, your profits, your stress, and everything basically. That's what we're also doing here. So trading is a business. You have to treat it as such. That is what it simply is. So some people can even do 1 to 3. Buying something for 2,000 naira, going back home to sell it for 6,000 naira. Some people can do that. Some people can even do more, 1 to 10, and etc., etc. But just understand the concept. You must be risking 1 to make 2 at least. That is the rule of thumb. How do you place your first trade? Here is a complete guide on how to place your first trade on your demo account. So first, you already have your MetaTrader 5 already open on your phone, like I have here. And then you want to also do analysis on TradingView. So I found a trade for you, which is GBP/JPY, and now we're about to execute it. So first off, I put my psychological level. So as of right now, the price is currently 188.649. And then I look for my roundup number, which is 188.500. The next one is 189.00. Like, in order for you to check whether it's correct, you have to measure from one psychological level to the next one. It must be what? 50 pips. You can see it's exactly 50 pips. So that means it is correct and it is a whole number, roundup number. So now price has already tested on 188.500. And then my trend line went from here and also bounced off here. So now this is also going to be a bounce. So the next thing I just want to do is to buy from here. I'm going to join the buy and I'm going to put my stop loss at the recent low. So I'm going to look for the long. I'm going to go in right here and then I put my stop loss on this recent, a bit below this recent low. So my stop loss pip value is 22 pips and I want to target 44 because I'm doing 1 to 2 risks to reward. So it's going to be 44 right here. So it must show that here it is risk to reward is 2. So in order for me to execute that, all I just need to do is to go on my phone too as well. And I'm going to check on quotes. No, the reason why the account balance has reduced is because that XAUSD I didn't do analysis, this one hits stop loss. So you can see that there's a stop loss behind it, right? Just for practice, don't worry, just for practice account so that you can know how everything works. So I'm going to come here and look for GBP/JPY. So this is GBP/JPY. Just in case you don't have it, you can click on this search GBP/JPY. So if you have it already, it's not going to show, but I already have it here at this point. So I'm going to tap on it, click on trade. And then to know the lot size to use, I have to come on my laptop and search. I want to use 1% of my account and my stop loss says 22 pips stop loss. I'm going to leave it out. If I select GBP JPY, it's going to ask me for the current ask price of USD JPY because of conversion. So I'm going to look for the ask price of USD JPY. So USD JPY, the current ask price is 140.94. 140.94. They'll ask just so that I can help them to calculate it accurately. So they're asking me to use 0.32. So I'm going to come here on my lot size, 0.32 lot size. And then my stop loss, I'm going to come back here on my analysis. Stop loss is where this red stop, 188.389. 188.389. That would be my SL. So I'm going to put it in 188.389. And then my take profit is where this green stop. That's going to be TP 189.074. 189.074. I'm going to click on buy. See, if I had gone in as that time when the price was here, I'd have been in profit now, but no problem. We are currently in order for me to go and see what I just did. I will swipe on this trade. I'll click on the the first icon here, and I'll click on chart in order for me to see it how it looks like on the chart. So it means that I went in for a buy here. My stop loss is at this bottom. My stop loss is here, 22 pips away, and then my take profit is at this point, 44 pips away. So there are two lines. If you look clearly, there's a red line and there's a blue line on this price path. Whenever you are buying, you are quoted on the red line. If you are selling, you are quoted on the blue line. That is the bid and the ask price. So now that my price where I got in here is at this top right here, it is when the blue line crosses above this blue, this is my entry point, my threshold, that's when I'll be in profit. If I was selling, I'll be quoted at the blue line. And so when the red crosses over the blue line, that's when I'll be in profit. And however, you can also enter multiple positions. Like now, I only have one trade running. I can enter another one again while that one is still running. By just simply coming on chart again, and I click on 0.32, and I click on buy. I tap on it again. I enter how many positions? That's 3 positions. I enter 2 at the same time. You see? Then I just need to come here again and fill them with the same exact information I have on the previous one. The same stop loss. I'll tap, paste. I can put the same stop loss on all of them and put the same take profit on all of them. Now, what is the importance of placing trades multiple times? Or just using the, why don't I just calculate the whole lot and put it all at once? I mean, you can do that too as well. You can decide to put it one at a time. I'm just showing you the possibilities, what is possible on the MetaTrader 5. Let this trade flow out and while I take you through other courses, and I'm going to be showing you the result of this one later on in the video. Here's the part that you all really need to understand. Do not over trade. Do not place too much trade at the same time. Do not over leverage at any time. Do not revenge trade. For example, if you traded and then it hits your stop loss, don't say, oh, I must get my money back. Don't be childish in that regard. Else, the market can go against you further than you can ever pay for, because this is 5 trillion in liquidity every day. It's going to swallow even your $1 million. It's going to take it off in one day. It's possible. So just be careful. Make sure you trade with proper risk management, and do not be emotional. Do not be fearful. Do not be too excited. Do not be, even when you win, if it's going in your favor, do not be excited. Just be neutral. Have a trading plan and trade the plan. Do not think while on a trade. Instead, write out a plan and then you trade the plan. You're going to be hearing more of these tips in the next lesson, which I'm going to be teaching you pretty soon. And congratulations, if you stayed up until this extent, you are well on your way to becoming a profitable trader soonest. What are the common mistakes to avoid? Now that you're already been able to understand the basic knowledge, now it's time for us to explain to you the common things other people who quit or those who lost massively most times, what they did so that you can avoid these things. These are the things that I also avoided over 9 years now that still kept me going. Number 1, avoid over trading and over leveraging. Sometimes you already told yourself that I'm just going to be making $100 in a day and I'll be comfortable in life if I'm able to make $100 in a day, because $100 in a day times 5 days, that's $500, times 4, that is 2,000 whooping dollars. I think I'll be decent if I have that amount of money. You think to yourself, right? But then with time, you start getting greed, starts setting in, and you want more and more and more. And I mean, it's normal. But the thing is, If you want more money, fund more money in your account in order for you to require the money that you desire. Don't use $100 to be chasing $1,000 in one day. That is not a decent trade. Because if you start using $100, start chasing $1,000 in one day, that will bring over trading, over leveraging your account, which will make you to lose all of the money in one day, and then you think it is scam. No, it's not a scam. You're just going about it the wrong way. So it's going to burn you out. Do not set unrealistic expectations. Do not put yourself under too much pressure, and then you're not able to now sleep. You are trading all the sessions. I listed 4 different sessions, which is London session, New York session, Sydney session, and Tokyo session, and then you now find yourself trading all of these sessions. No, I only just do 2. You should make sure you stick to 1 or 2 of them, and then use the other ones to relax. There's a reason why there's a night and day. You have to make sure that you don't burn out, and then you do the right thing at the right time. The next common mistake that I know traders always make is chasing losses. They just want to revenge trade because they lost, they want to make the money back. No, there's nothing like your money once you have already funded the money in the Forex market. It's now our money. It's either you fight to keep the money, and then while fighting to keep the money, some money then join, which is a plus to you, or you just lose guard and let everything and throw your risk management all in the air and then chasing thin air. So it's important that even if while trying to look for more money, then you lost a part of the percentage of the money, you are not emotional. You're not trying to want to chase that particular money back. Instead, you focus on what your trading plan. Anytime that your trading system comes in play, that's where you trade. You are buying and selling because your trading plan asks you to, not because you feel the need to want to recover the losses that you've made. I hope that's sync. The next big common mistake I notice traders also make is not journaling their trades. They think they already mastered all the skill sets and everything they need, and then they throw journaling out. There's one quote that sticks. They say a short pen is better than a long memory, because with a short pen, you write that thing down, your long memory will even remember it even further. So it's important that everything you have to journal: the time, the trade, the pair, the entry price, the closing price, the amount of money you lost or the amount of money you made. You have to know why did this trade work out, why did it not work out, so that next time you'll be able to take the right decision. So it's important you journal your trades before, during, and after. Your emotions, how you are thinking, how you are feeling. It's very crucial. This helps continuity. In days when you are having losses, it helps you to go back to the winning ones and say, okay, what was I doing in these days where I was having wins? And then you capitalize on them, and then you're back up against your wins. So it's really very crucial. Journaling is a good to go. So I would recommend our Fire Pip Trading Journal. You can drop out any of our offices to pick up yours, and it's just for a little token. Ignoring risk is another very crucial thing. So you get a certain phase, you think that you already mastered this trading thing and you're already having back-to-back winning streaks, and then you throw risk up into the roof. Now that's a very big blocker right there. That thing can send you faster to the village than your village people would even drag you down. So do not ignore risk. Always stick to 1%. Now that you're learning, stick to 1%. If you're willing to take more percentage, but no exact risk that you're taking at each point in time. For example, if you have an account of $100, risk say 5%, because it's $100. The percentage have to be bigger now so that the money can even make sense to you. Whenever you make profit, it can make sense to you. So 5% on $100, that's like $5. I mean, it is decent. That's just okay. Do not go ahead and risk and place one standard lot size. You don't even know what you're risking. That's what most of them did. They didn't know what they were risking at each point in time. They just felt that they were trading and they were making profit. A profit that is made with bad trading habits is a profit soon gone, because you still will lose all of that money back into the trading system, because you didn't even know why you made the profit. You don't know what was working. You don't know what isn't. What you did well for you to be able to get that particular amount of money. So it's important you journal, and also you stick to a very good, decent risk management. The last but not the least is trading with real money too early. So many people traded with real amount of money when they were learning, and then they exhausted all their money, and when they've now gotten to a point of mastery, they don't have no money left to fund their account. That is a very big problem that happens to most traders. So if you are in that shoes, please kindly comment in this video and advise those who are watching this video for the first time not to fall into that pitfall. So if you are genuinely learning trading, you want to really use this as a means to settle down, or you want to add it as an extra income, do not fund your account too early. Spend your time on demo account, study and study and study, get to the point of mastery, and then eventually you can fund an account. Start with an amount you can conveniently trade with, and then risk. There are some people, I understand, demo doesn't make sense to them because they have family to feed. They already exposed to the financial market. So in that case, you can start with a small amount of money, whatever that is small. You can be $1,000 up to even $100 or $50 as far as the case may be. But don't start with too much amount of money at your learning phase that when you now get a point of mastery, you don't have no money to fund in your account anymore. And finally, you don't have to know everything to get started. You just need to take action and stay consistent. You definitely will make profit with time. So it has to do with learning, and this is not a thing that you get to just learn in 1 week or in 1 month, or it's a skill and it's a continuum. It's worth learning. Even if it's going to take you 4 years, I think it's something that you should calm your head down and learn. I mean, some of us went to school for 4 years and we don't really have anything to show for it. We're not really using it to work today. So that's not to say that other people are not using it to work, but I mean, you spend that much time for a certificate. Why don't you also want to spend that much time in order for you to improve yourself, a skill set that's going to be printing you dollars day in and day out? Just saying. But however, if you ever want to be a part of my Telegram channel where I also send signal one day, one free signal, the link is in the description box. Use that link to be a part of us, and then we'll be willing to share our signal. That signal simply means anytime I'm getting in on any trade, if I'm buying, I tell you that you are buying. If I'm selling, I tell you that I'm selling. If I make profits, you get to make profit. If I make losses, you still get to make losses. Obviously, our wins are more than our losses. You definitely will be able to make wins at the end of the day. And we also have a premium one where you get to subscribe to my premium signals. All of this information will be down there in the description box and also pinned to the first comments below. So use any of that. And one thing I really appreciate you do for me right now is to smash the like in this video if you really gain value. And if you gain really good value, I want you to hit the subscribe button too as well, so that this video can be recommended to other people. And nice to have you around. You can also check out other advanced videos that can help you, guide you into your Forex trading journey. You don't need a lot of money to start trading, just the right mindset and tools. And you also have to know that Forex is a skill set, not a get-rich-quick scheme. The most consistent traders master risk not just on charts. Your first goal isn't profit, but first to master the skill and not to lose. These are the things that you should have in your mindset and run with them. You definitely will make profit with time. Have a nice time. Bye for now.